All right, let's go on to top five things to watch next week. And so, number five, I wanted to touch on bond yields. Now, listen, obviously, I'm going to Chicago and I'm going to argue bullish bonds, but there is no denying that bonds were overdone on the short term. And I was on the sideline looking for a pullback to buy dips on. And here, we finally have the kick, right? And so this is the 10-year Treasury yield. We went, I think the bottom was like 195. We went to about 211, so about 15, basically a 15 basis point swing. So
Yeah.
you,
I
are
listen
you are
for
you are
the bond bears should not take any solace. Like we're still licking wounds, and by no means is this a victory.
look? It's
You're
just it
absolutely
was.
correct. We were so overbought, really, until we get back up to, you know, 250, where you can't even consider this anything more than a correction in your
I
bond
think we can even
pull
see
move.
two and a quarter. I think we could see two and a quarter, even 230. I mean that is
Well,
actually
I think
all
we
on the
could see
table.
a lot more than that. I just don't think that at two and a quarter, I think you're still going to be correct in that the bonds have been in
Oh,
a bull
I'd
market.
probably be a buyer two and a quarter on
Okay, well
bonds,
there you go.
right? Like I mean, we'll see when it gets there, but it's finally underway. So number four, I wanted to talk about Goldman Sachs. Now the earnings are next week as well, but
Yeah,
uh,
it's a big breakout, right?
yeah. So when you look at this chart, and the thing is that I think these investment banks, like Morgan Stanley, is just trading like shit too. But these investment banks, like I think that they're a bit of a tell. And if the market is going to do some bullish move to 31, 3,200 or something like this on the upside of the S&P or even more, you have to think these investment banks should participate. And so this breakout is interesting because to me it kind of supports this idea that maybe there could be some short-term upside on the stock market. But I'll tell you that earnings next week is going to be a thing. Like, what if it's one of those where, uh, you know, the market realizes that Goldman's not done selling, and then they just hammer it after the earnings, and we're back down below 200. I mean, this is definitely something to watch next week. Do you have a bias?
Yeah, I hate it, as much as I hate to say this, I think that's a clean breakout, and I would go with it.
So
I'm not going to fade this.
you're
Like I'm a buyer of this. I
You
think
know what?
that
I acknowledge that it is a clean technical breakout, but I want to see what happens on its earnings before I make my stance on this. Anyway,
yeah.
watching Goldman Sachs, I think it's worth watching. Keep it on your radar, everyone. So number three, uh, Kev, this was yours. China numbers.
There's a whole slew of them, and I know there's a lot of China bears out there, and it'll be interesting to see if the numbers continue to disappoint because so far they have, right? And
Right.
there's no doubt that when you look at the commodities are showing no signs of bouncing, and as much as the stock market's doing okay and hanging in there, there's not much to get excited about in terms of some other kind of technical parts of the market, and I would really like to see some China numbers that maybe. I know they're made up anyways, but it'd make me feel better if they made up some good ones.
All right. So let's move on. Number two, we have retail sales, and while we have U.S. retail sales coming out next week, those retail sales are actually coming out in a whole slew of different countries. So Canadian retail sales out in England, they have the retail sales coming out. So it's a retail sales kind of week, and so far the economic data coming from the U.S. in the last wave, has been stronger. So I'm curious whether retail sales will continue to support that trend. What's your thinking?
Well, well, the economic news has been better because you guys, all you economic bears, had gotten the so much pessimism built into the market that it was hard not
That is
to.
pretty much pricing in the banana already, right?
Yeah, that's right. So the reality is, if the banana doesn't happen right, like today, then all of a sudden, whoops, we beat expectations. I'm not. I still think that things are not going that great, but that versus what you guys have priced in, it's going to be better than expected, and it will continue. So I suspect that you will continue to find that the numbers are tepid but beating expectations.
All right.
Except for inflation, which will just be blowing the socks off of everything.
Jesus Christ. All right. Number one, earnings. And so for me, obviously we have an earnings season coming up, and it's all firing up here. And in my mind, one of the most interesting things to contradict your play is whether or not the earnings disappoint, because earnings growth. An earnings recession, which is 2 quarters of year-over-year declines in earnings, right? May very well emerge if the earnings disappoint. And I think I don't know whether Rosenberg changed his tune or not. You can maybe confirm, because I don't know.
No, he's still staying on there. He's still
so it's
bearish rosy.
Yeah, but I mean, his view is, though, that this isn't going to be a consumer recession. Oh, damn it, I owe you a beer, a consumer banana, and but rather that this was going to end up being that this was going to be more of an earnings banana.
Yeah,
right.
Listen, did you see the cover of The Economist today or yesterday?
No, what was it?
Oh, go put it up.
Oh my God.
I'll read you the headline. July 13th edition. America's expansion is now the longest on record.
Oh yeah.
And the cover says riding high. And it says what could bring down the American economy. Now,
right.
Some people have argued that they're actually questioning what could bring it down, so therefore it's not a real bullish argument, like it's not the true magazine cover. I think that these magazine guys have smartened up to the fact that they shouldn't come out and be bullish at the top. But I implicit in this, to me, is still a bullish kind of bent. And here's what I contend, Patrick. We've had now 9 years of American stocks being by far and away the best performing stocks out there. Okay. Not even close. Like they've doubled or tripled the performance of the MSCI World Index. Okay.
Thank you, Europe.
I think that especially Europe. I think that we're about to embark on the rest of the world catching up. So I am not like a huge.
Oh my God, that's the exact opposite of what you've been arguing with Brent Johnson, which is
I never said that. No.
So so you're not in the Brent Johnson camp? You're not in the camp that the milkshake is going to drive the U.S. equity market?
I was never a milkshake guy. I was never I like Brent and his milkshakes and stuff, but I was never in his camp that we're going to get this. And as you know, I have become less bullish on the U.S. market as all of a sudden all the technicians start telling me that we're about to break away. By the way, let's review here. I think it was a week ago that Novogratz was telling us all how good the chart formation was on the S&P, right?
Right.
And can you pull up the S&P? I don't think it's taken off by any means, and it's kind of.
But it hasn't broken down either, right?
So I agree with you there, but I just think that to me, it's symptomatic of the fact that whereas before when I was bullish,
come on, it's
before
continued to rip,
Patrick,
dude.
Well, it's been higher, but the reality is that you guys were all making fun of me, the whole way up, consistently making fun of me. And now all of a sudden, now that we're hitting new highs, people are getting bullish. Like what?
And they're getting mad at you for jumping off the bandwagon.
Yeah. I'm like, what? So you're getting mad because I like to buy low and sell high?
No, you just love the pain of everyone shitting on you. So you basically you're incredibly uncomfortable in a room where everyone's agreeing with you. Yeah, so the moment that is like, I gotta say something that's controversial.
No, I don't. I have no desire to say something controversial. I just don't want to be like, I'm like that. What is it? Who was it that said I don't want to be in a club that admits me as a member? That's how I kind of feel, that if all of a sudden everyone's agreeing with me, I must be wrong.
Yeah.
But no, come on, Patrick. You have to
all
admit
right.
that.
Anyway, the point.
So going back to my idea though. I think that we're going to look back at this Economist cover and say this was the end of the kind of golden period of U.S. equities versus the rest of the world. And that doesn't mean I'm bearish. It doesn't mean I'm like you, that I think the world's ending and that we're going to, collapse into a deflationary mess and that you better buy your guns and ammo. But I do believe that I would rather own other equities going forward than American, because I think that American stocks are no longer going to be the leaders in this next move higher.
All right. So, going back to the point though of whether there's going to be an earnings banana.
So I agree with you. My point is
just let me make my point though.
Yeah.
What is interesting is I like the analog of going back to 1990, which is that when the earnings recession was confirmed in 1990, because it wasn't a big consumer. Well, I guess there was a consumer recession. Oh, damn it! Consumer banana element to it.
Yeah. You're going to be paying for a lot of beers.
Oh my God! You know what? The best thing is to just fast forward the end of the show so that it doesn't cost me any more beers.
Yeah.
So the thing with this Goldman. Goldman with this chart going back then is that the market proceeded to rise after the earnings recession an extra like 10%. And it lasted another 3-4 months and then kicked in a solid 15 to 20% wipeout afterwards. But it first went up before it went down. And so it'd be curious whether your little theory of the S&P originally going higher into the summer continues to play out in spite of even if the earnings come out weak. And then it's something into the that fourth quarter, that ominous window that something scarier happens. Anyway, that's just my 2 cents.
Well, and I'm not going to disagree that we might see some bad earnings numbers, and I am by no means like a huge bull and think that things are growing great for companies, because they're not. And I think that we're somewhat expensive, and I think that if you're looking for value, you're not going to find it in the U.S. stock market. Go look somewhere else.